Hey everybody, I'm Max Mendelson, and I am doing my presentation on the CME Group. So a little bit of background on the company. CME Group stands for Chicago Mercantile Exchange Group. It is the world's largest derivatives exchange. So you can trade futures and options on the exchange in multiple asset classes like agricultural products, metals, interest rates, currencies, different meats, among many other classes that are tradable on the system, both through open outcry, which is the legacy system when you think of traders on the floor yelling and kind of shouting their orders, as well as Globex, which is the current, how people are trading through electronic means where most of the business has been done for the last, 10, 15, 20 years. CME Group was formed in 2007. There are two large exchanges in Chicago. There was, like I said, the Chicago Mercantile Exchange, as well as the Chicago Board of Trade. And these two exchanges actually merged in 2007 to create CME Group. So some current info on the business. CME Group sees about 20 million contracts trade each day through, as I mentioned, open outcry, as well as Globex. And the way they make their money is CME takes a commission on each contract traded. So you got to realize 20 million contracts trading, obviously different people and different institutions are paying different rates, but there's a lot of revenue flowing through CME every day. That's where the bulk of its money does come from, but they also make money on its data feed. So CME offers data to customers to see the depth of market, which is kind of shown below. Here you see in the middle, you see NASDAQ futures. On the right, you see S&P futures. And you can see kind of how many people are bidding and offering at each price level. So that's how CME makes money as well, by charging that. $4.7 billion in revenue in 2021, and about 93% of that came from either commissions or data feeds. So that's really the bulk of their business, is the commission and the data that they provide to customers, institutions, banks alike. We want to talk about the revenue and the net income by year. So on this chart, the bar chart, you'll see revenue from 2018 through 2021. And in the orange line, you'll see the net income in that same time period. So as we can see, there's growth, obviously, 2018, 2021, we see growth from 4.2 billion in revenue to about 4.5 billion in revenue. We do unfortunately see a decline in revenue, though, year over year, 2020 and 2021. But the most important number for me in determining kind of how profitable or how attractive a company is to invest in is their net income. So just because we obviously see a decrease in the revenue from 2020 to 2021, there's a pretty large increase in net income, meaning that they were able to really, cut their costs or find a way to really get their costs kind of more in check. Because even with about $200 million in a revenue loss, we actually increased about 400 million in net margin year over year, 2020 to 2021. Here's a stock price by year. In that kind of same time frame, you can see in 2018, it was trading about the start of the year about $150 a share. Obviously, we know what happened between 2020 and 2021. COVID hit, kind of, came back to where it was in the start of 2018. But fortunately for the company, it is now at its all-time highs right now, at about $250 a share. So not only has the company really bounced back from COVID, but we've also seen, obviously, year-over-year growth, almost annual year-over-year growth from 2018 to 2021. And obviously, as mentioned, all-time highs. The company currently has a market cap of about $82 billion. It's a very large company. It's obviously on, Fortune 500 list. And it's a very, very attractive company. And in terms of kind of the stock price and just seeing the stock growth year over year. Some final thoughts and then kind of takeaways is that commodity trading isn't going anywhere. And then being the largest derivatives exchange, they really do have not a monopoly, but they do have, their customer base. And if you want to trade those products, you go to the CME Group to trade them. As I mentioned, growth slowed a bit 2020 and 2021. Margin did improve pretty drastically. And the company has shown year-over-year growth both before the pandemic as well as since the start of it. As I mentioned, too, the stock price has recovered from, and not only recovered, but also exceeded pandemic lows in the last couple of months. And then finally, a big thing I wanted to look at was kind of the S&P 500. So S&P 500 year over year, April 21 to 22 was up about 5%. CME stock in that same time period was up 20%. So about four times as much return as you would have had if you put your money in the S&P 500. So I do think it's an attractive stock. And I do think that the company will continue to grow. And I definitely think it's an attractive buy if you're looking to invest in a commodities exchange.